Hello, good evening, everybody. Welcome. Thanks for joining me tonight. And just a reminder to everybody, I host these sessions every Tuesday and Thursday at 10 p.m. Eastern. Come join me. We take a look at the market, just for plays, just thoughts of what could happen, and basically just planning out trade ideas, and just sharing it. So I hope that everybody, and if you haven't already, share with your family, friends, anyone who you think will benefit from this. And I hope that everybody learns. This is all about helping each other grow and learn how to trade. So, all right, let's hop right into it. So, this is how I usually start. Right, we look at the heat map of what has happened today. It's been a pretty crazy. It's been a pretty crazy week, right? Since last Thursday, everything's been running up. Um, so definitely something that is, taking us for a swift spin this year. I know that it's taken me out of the blue. You would think that it would continue to the downside, but that's not what's happening. Right? As you can see here. Let me get my pen up. All right. Information technology was red for about 3 months, right? But now it's green. Communication services, consumer discretionary. You see Tesla today broke 1,000, or I actually went to 1,000 and came back a little bit. But huge green, right? Financials, of course, consumer staples, industrials, a little bit. So these one right here are sort of flat, right? Healthcare is flat. But you can see opposite, right? Opposite of what we've been seeing the last 3 months. Energy is red. Utility is sort of flat to the bearish side, right? Yeah. Real estate, sort of flat too, right? Healthcare, because healthcare was green the last 3 months, right? So you're seeing everything kind of just reverse, right? The money that what used to be in here is just sort of just coming back into over here. Now, is it gonna stay? Is it gonna stay like that for a while? We're not sure. All right. So that's why we're looking at what could happen. Right. So let's take a look at the SPY chart. As you can see, we broke outside of this channel, right? But just because we broke out of this channel doesn't mean this channel is probably over. So we keep it here. We want to see where it establishes itself, right? One of the good things is that price is over both the 50 and the 200, right? This is a very bullish sign, right? Over the 50, 200. But we want to be concerned here because this right here, this was like our second, right? So it came here, bounce, and then bounce down, right? So this right here is some sort of resistance level that we need to look out for, right? 460, around 460. We could even say like right here, around 450, right? 450 to 460. We need to really look out for any reversal, right? We had a crazy run, right? The last 1, 2, 3, 4, 5, 6 days. So about a week of literally just straight up, right? Just running straight up, right? So one, right? We want to be careful of this right here. A repeat of this here. Right? Come approaches here, right? Be very careful. At the moment, I wouldn't say you should be looking for longs yet, right? at the moment, because you don't know if it's going to be a continuation to the downside, or if it's going to continue to the upside, right? I my my best Your best bet is just to wait at moments like this, because it just right here, it just broke out of this range, right? This downward channel, and we haven't it's been running, but we haven't set any new support, right? So your best bet is to wait to see where support is going to be new support is going to be made, right? If it could come back and use this as support, or come back to here, right? Come back to the 50 here would be good. If it comes back and use this old resistance as support, it it's not the greatest, but for the moment, it would just mean that we won't be going down as hard as we did the last 3 months, right? Since the beginning of the year. So possibility of what could happen is, maybe if we, for bullish price action, we will want to look for is it, dip a little bit here, make a new support, and then continue to the upside like this, right? Bullish, that's what the price action we want to look for. For kind of neutral, we want it to come down to here, right? This resistance line here, and sort of just stay here, right? So neutral meaning it's kind of flat, so down here. And bearish action is if it goes back into this channel, this downward channel, right? So the three possibilities of what thing could happen in the future, and what we have to look out for, right? If it goes back into this channel, it's going to continue the bearish move to the downside, means we're gonna fall even more. And if it's neutral, it's gonna come back down. Maybe use this as support, this old resistance, right? Old resistance here, and bounce, right? Bounce in here for a while, and if it's bullish, it'll just continue making highs, right? And you will know it's bullish, right? Is if it stays above the 50 and the 200, and it establishes a support above the 50 to 200 too. So you'll see it trending again, right? The 50 to 200 could doing something like this, right? From like before, see the 50 to 200, they're keeping a pretty good distance from each other. 50 is above the 200. That's how you know it's bullish, because the closer, that means that the closer time frames, or the closer average to you, right, which is the 50, it's taking the average of the price action of the last 50 days and using that as average. And the bigger the gap between the 50 and the 200 means that there's a stronger move to the upside, right? Stronger move to the upside. And that's what it's measuring when we're looking at the two and the distance apart. Right. So at the moment, there's still not much to do. I wouldn't recommend getting into any swings just yet, because we don't know for sure what direction. It's been a pretty long run up, 6 days, so we don't know if it's gonna pull back, or if it can keep going. Because you can see here, even some of the longer drops, right? Most of them about a week and a half, and then they bounce back. So if it follows suit here, maybe we have a day or so, a few more days of green. If anything, we could probably even test this right here and get rejected tomorrow. So the key point to look for tomorrow is this area where it does above 450. So right here is about 450. So from 450 to the very top of this from before was 460, right? So in this range, this could be a resistance range, right? A resistance range. And we never want to what we never want to do is just say that, oh, this is a resistance area at 450. Therefore, if it touches 450 or it goes above 450, it means it never returns. Think of resistance as an area. It's not going to be a flat line, because you have to account for some slipperage, right? FOMO, people who are, they think that they missed the bus, right? So you have all these people loading in, and It could go to about 450, 455, even as high as 460 before it comes down. But we want to look for where it will bounce. And just based off of the areas from before, so this range right here has some, this range right here in yellow has some price action that rejected to the downside before. So there could be some people here still left out, and maybe the people that got they took a loss here or they're holding here. Maybe they're thinking about exiting, but that's the area to look out for. So this little range right here, watch out for that because we could, as we approach it or get in it, we could reverse, right? So if we go to the downside, you want to look that's where we want to look for our three possibilities, right? The first possibility of looking for where our support is so that we can enter long, right? Or if it continues to be flat, which then you employ a range bound strategy to play the market. Or if it continues to the downside, then you can short it or you could just stay out and watch the market. But at the moment, I wouldn't advise taking any position, any swing positions yet. Right? So we dive down. Let's dive down to the hourly. The hourly is probably going to look pretty good because we've been running for a few days, right? 50 over the 200, right? 50 over the 200. So you can see here the 50 is this purple line, 200. So when a stock starts trending, where it starts trending, you see this purple, right? This 50 moving average goes above the 200, right? It's going to be a lagger, but that's how you know it's trending, right? So if you are trading on a shorter time span, right, like using the hourly, the 15-minute, 30-minute, this 50 could be where your entries are. You can see every time price comes back to this 50, it goes to the upside. But this only works if you're using a shorter time horizon, right? Don't go off of the hourly and expect to hold for more than a day or two, right? If you go into the hourly, right? If you, an example of what you will want to do is you see it close to the 50 here, right? Close to the 50, or these are your areas where you would have wanted to enter, right? And so these will be your entry. Your stop will be under the 50 down here. And then you try to catch it for this ride. So that, see right here, this was a 1 day trade. This was another 1 day trade. And then this was about half a day trade, right? Half a day. So that's how you're timing out your entries, right? And watching for plays. So this is how you use the 1 hour chart and how I use it. So here you go. So for tomorrow, it could reverse. You can see here, every time it makes a new high, comes back to this 50, right? Comes back to the 50, then we can see where if it wants to trend up to the upside again. So tomorrow, probably the first half of tomorrow could come back to the 50, right? Or even overnight. So you could see this move right here, right? Overnight, it dropped. As soon as it opened, it shoots up, right? Right? Overnight, it dropped. As soon as it opened, shoots up. Overnight, it drops, open, or about half the day, right? What exactly? Actually, let's go back. Look at this day, right? What happened this day? This is a day where you could have possibly taken 2 trades because it dropped overnight, right? But as soon as it opened, it shot up and then big drop and then shot up again, right? So that was Monday. So Tuesday, today, early in the morning, it dropped a little bit after in the evening at open, right? Dropped a little bit in the evening, went up, dropped before open, and then open, it just shot up, right? So that's the trend that's been happening. So you can maybe expect the same thing. It could rhyme with what has been happening. So if tonight we have a huge or a pretty decent drop and it goes up tomorrow, maybe you could take a trade to the upside, right? Or if half the day, and when it stays close to this 50, right? Close to the 50 is where you want to take an entry, right? So that's what you would look for. And that's just a day trade, right? At most you can hold it for maybe 2 days, but that's how you would time your entry, right? Get it right at the 50 or as close to the 50 as possible. So here, here, right? So for the last like 6 days that it's been running, those were your entries that you could look for. And by no means is that telling you that for you have a for sure trade if you trade off of the 50. That just tells you your risk to reward is that's where it's best, right? Risk to reward, because you're going to be setting a stop so that if you do get stopped out, you get stopped out right here. And if it continues to the downside, then you watch for the same thing again to downside. Right? Like something like this that happened like 2 weeks back, right? Looking for these 50s to enter short, right? Right. So if it comes to the 50, that's where you're taking your risk. And the reason why you don't want to do it up here is because where are you going to set your stop? You're going to set it right here. I mean, you could take a stab at the shorting, but you can see here the short side is very limited when the 50 is over the 200. You have a better chance at the at taking longs because you don't know how high it can go, right? When the 50 is over 200, take a stab at longs. All right, so that's the hourly. The daily, I say don't do anything yet. Just watch it. Watch what you're gonna do. And if you're trading off the daily, expect something, a trade that will probably last you like a week, right? So a week in time. So at the very peak here, with how the market structure is, we're not really sure if it's going to go to the upside or downside. And if it goes to the upside, we need to see it make form some sort of support first. Okay, let's take a look at Apple. Even Apple is doing good, right? So it's downward channel right here. It's just slow. Today was the first day it peaked above. You can see even with the last week, or about a week worth of movement right here, it's still today was just the first day that it peaked above this resistance. Now this I wouldn't consider this a break yet. The reasoning behind that is because we just barely peaked above it, right? We peaked above it. If it continues to the upside, right, it could continue for the next 3-4 days. It still wouldn't be considered a break. A break, well, you can consider a break, but you want to establish where support is first before you get in, right? Because you didn't catch it. If you didn't catch it right at this break here, you don't know an area of where to set a stop. If you're playing the momentum, you could set a stop right under here, right? Right under here at the day's low here, and maybe catch it for a few more days. But you want to think of the odds too. You know, it's been running for a week, basically a week here, right? What's the chance of it going green for another 3-4 days, right? It's very unlikely, right? So you see here, right? This was the upside too, and then it got rejected. So we want to look out for things like this, right? This has not formed any significant point market structure yet, any points, and will not, because you can see here, you know, we still have our lower highs that established. This is still a lower high, right? So, you know, be very careful, right? So that's Apple. And for sure, feel free to disagree with me. You know, I know I'm not gonna be 100% accurate. This is just what I see. If you see something different, you use something different, you know, feel free to let us know also. You know, I know for sure I'm not the best trader out there. I can only offer what I see. All right. So you can see this. We dive down to the hourly. Right. Dive down to the hourly. You can see the price action is still within this channel. Right. It did on the daily. It looked like it peaked above. Right. Peaked above. Man. Right, it looked like it peaked above, but when we look at the hourly, it's still looking like it would be a good short just from this, right? So maybe take it at 170. 170 would be a good short, right? 170, maybe go up like to 172 to where you set your stop at, right? Short at 170, set a stop at 172, so $2 risk, and for a chance to catch it, the swing back down to uh 150, 150 or below. Okay, so that's a pretty good trade. You know, you're playing the odds here. Of course, you could also play it to the long side, right? To the long side, which is I wouldn't recommend it just yet because of how high it shot up already. Right? If you're going to play to the long side, look at what the structure has been doing. Right? So the structure has been following this 50 also. It's been respecting it. Every time it comes to 50, you could have entered. But your best bet is when the 50 crosses the 200 to the upside, right? And maybe play when it gets close to the 50 again. So if this keeps doing this, right? The 50 goes like this. Next time to catch it is probably right around here, right? So watch for that. So at the moment, I wouldn't really recommend taking it long because how high it is. You know, maybe it'll dip a little bit, right? So closer, like even here, I wouldn't recommend it. Look how far it is from the 50. Right? You're that much of a gap between market price to where you can set a stop for. You could set a reasonable stop for the market structure, right? Or if you wanted to play a breakout, you could have done, you know, you could have entered around here and set a stop right here, but you would be in the risk of if there was a rejection to get stopped out. Right? So when you do play momentum, you will get stopped out a lot. Okay? That's why you play. It's better to just look at the structure and play off the structure. Right? So at the moment, I wouldn't recommend a long position on Apple. Right? Just based off what I've seen, the risk to reward is not there. What you want to avoid is something like this, right? They shot up really, really fast, and then it sort of levels out and then breaks down again, right? So this is what you're avoiding by not trading here. So that's why I just say don't take a long position. It's not a good place to take a long position because this could happen and break down like this, right? And that's why I say it's better to take a short position because if you take a short position, you're very close to the top of this range, right? This downward channel. You're very close to the top of it, and you have a better odds of taking a position here and then setting a stop outside of this range. Because if it breaks outside of this range, you know it's very bullish price action. Right? You take a small hit, but if it doesn't and continues on this range, you have for the risk of this right here, right? And maybe we don't even have to do the math on this, right? You could just see it with your eyes, right? For the risk, for this little chunk of risk right here, you have the potential to capture this drop, right? So just from eyeing it, right, you can watch for that. So I know earlier I said that if you're using the hourly, you know, it's a trade that will last, you know, a few days. But when the structure is very good like this, right? Where you're looking at a structure that took multiple days to form, and you're using the hourly as a place to pinpoint your entry. You can set yourself up for something like that. But if you're playing the direction, right? If you're playing the direction, the trend that it's been forming, then yes, you only have a few days, right? Or even a day or two at most. Because if you're playing to the bullish side, right? Like the 50 and the 200s like this, and you're catching it by the 50, you catch it down at the 50 like this, you get maybe this day and then this day. That's it. If if it's like if prices continues to be super bullish, if anything, you catch it down here, you catch it that, and then out that same day. You catch it this day right here and out this right here. That's it. Right. But just looking at the structure here, I think it could give you a pretty good chance for this drop. Right. Play that drop. That's the structure that's been following, and don't consider it done yet. Right. Just watch it. It's something that took three months to form, so maybe it'll continue. Right. All right. Let's take a look at Tesla today. Tesla's been pretty crazy, and just to, I mean, let this sink in. I know it's green, so people who didn't get in at the lower part down here, you already missed that bullish jump right here. So don't jump in. It's way too late, right? This is when you're getting FOMO, right? It's too late for that jump. And a price move like this, it could be a repeat of this right here, right? This right here could be a repeat of this right here. So always have that in the back of your mind, right? So don't get trapped in that. Don't get into FOMO because it's way too high. This is out of the ordinary. It's just been jumping like crazy, right? And to put it into perspective, this right here from 750 all the way to 1,000, that's a 30% move. And just price alone, it's about a $250 range, right? That's pretty crazy. I wouldn't say it's sustainable. If anything, the people who got in, you have people who got in down here who will probably take profit because that's that's a 30% gain on the stock, right? You have people who got in here that will probably get out here, right? You have people who got in here that will probably got out, right? So if you are the one who's buying up here, all these people down here are selling to you. 3 groups of possible traders that are selling to you. Be on the lookout, right? I'm saying that price will have to drop back down into this range. This range exists because it formed over the course of 3 months, and we're going to take a look at it and just leave it there for reference, right? Because if price continues to the downside and goes back in this range, then we have something to tell us what price could do in the future. But if price just comes back and bounce off this, we have a level of support down here, right? Or if a new support forms, like somewhere up here, then we can draw that. But that's why it's not a good idea to leave out everything that you've been following, right? Keep a watch on it because it could come back and retest it in the future, right? So at the moment, Tesla is way, way too overextended, right? Just be very careful what you do. I wouldn't necessarily take a long, right? You already miss the first boat. Wait for it to find a new dock and then you get on, right? So if they already sailed off, let them find a dock right here, right? If it's a dock right here or if it's a dock right down here or whatever, right? Look for that dock before you load again, right? Don't try to catch that ship. It's already gone. It already left without you. You missed it. You hit the snooze button, right? So watch for that. Tomorrow, I don't know if it's gonna reject. If we have another strong day, which we could, um, my suggestion is just to watch where support is gonna form. Right, support if support is going to form down here, or if it comes back, it will eventually come back. So, just be patient with it. Let the trade come to you. Okay. So if you're longer, so you can see this right here on the hourly, it never really pulled back to give you a trade. And sometimes things suck like that. It never really pulled back. Right, the cross was here. So this is probably your best bet if you miss it all the way down here to get in to the short side, the long side. If you miss, right, here down here, you would just been gambling if you got in because nothing supported that move. You didn't even know. Most people were still afraid of going long down here because when you was down here, your thinking was like maybe it could go and test this right here, right? So the people who probably got in here was probably short, just taking a stab in the dark. So your best entry was probably down here, and if you missed that, right, it never really gave you a chance, right? It did move right here, but that was still not much of a drop. But wait for it, right? Wait for it to come back, because if it does, and you happen to get in here, the structure that it has to hold is all the way back down here, the support that it has to hold for it to continue being bullish. It's back down here at around 925, 930. Okay, so that's one hell of a drop, right? About a $70 drop, right? If you can stomach that, I mean, all the power to you. But it's better to just play the odds, right? So that's if you're gonna take a long position. If you're gonna short, this is a pretty good area to short, right? Because you have a $70 drop that could happen and it'll still keep the structure of this bullish move. Or what is also a possibility is if price continues to drop and goes back into this range, right? Oh, it's not going to happen over the course of just a few days here, but maybe if it takes like the next 4 or 5 days to just break back into this range right here, and then another week or two, to come back to the bottom of this support. So 680, right, to go. But that's one play out, right? So at the moment, not a good idea to long. Probably an okay idea to short, but short for tight stop, right? So you were to short at 1,000, maybe set like a stop at at 1010, right? So $10 risk, and it's justifiable for a $10 risk on Tesla because Tesla has a daily range that could be between $50 to $100 in a day, right? So keep that in mind also. But at the moment, I don't advise going long. It's too high. There's no reasonable place to say your stop. Tesla. So still could be it wouldn't be a bad idea to take based off the daily. It wouldn't be a bad idea to take a gamble short right here, right? If something were to happen and drop all the way back down here, that good risk to reward. Especially if you have an options contract that gives you it has a capped maximum loss, right? So if you can cap your loss to just this bit right here, and then the possibility of catching this drop right here. All right. That's one. Okay, so that's Tesla. Be careful with Tesla. It's too high too fast. All right, it's not gonna go back to all-time highs just like that. Oh, it could. Anything could happen, but be on the lookout. right? AMD just been sort of, right? AMD, if anything, we look at this channel, right? It's showing some weakness. To me, it's showing some weakness at the top of this channel, right? You had 2 days of strong moves here, 2 days of back-to-back strong moves, a little dip, and then it just failed to push through here, right? So you could take, it's still close enough to that top right there, the resistance, where you could take a position and set your stop like right here at 120, right? So that if it goes to 120, you could be out of that position. And price is just sitting about near 115, right? So we say entry is 115, exit is 120, right? Entry and stop at 120, right? So $5 risk for a potential at a drop that could go down to the at 95 or 90, right? Could be a good target. So right here, $5 risk, right? $5 risk for a potential at what's it? That's if it goes to 95, that's $10 reward. If it goes to 90, that's 15, right? So this is 2x right here, and this is 3x, right? Potential 3x, right? So that's how you're playing your odds, right? You're looking at the possibilities. Of course, it could continue to the upside, but at the moment, I wouldn't really bet on it, just given how the structure is forming, and we're showing some weakness here. So your best bet is, for me at least, I think the best bet is on the short side for here. We could be short basis bias. Right? If you're taking a long, wait for this breakout, right? Just like the other stocks that we looked at, right? Just like Tesla, right? If you want a long, right? We go back to the stock of Tesla, and so look at this, right? If you want a long, and for AMD, the price is like right here, right? And you want it to be a momentum trade. Momentum means it's gonna blow through this resistance and it's gonna keep going for a while, and you're playing for that move to keep going to the upside. Meaning, as soon as it breaks this resistance, take the trade and set a stop like down here, or right down here, which you could probably get stopped out if it reverses, or set it at day low. So as soon as it breaks, set it at day low, and then the day low right here, and then right to the upside, right? That's a momentum trade. So that's one thing you could do for AMD. Take a short, which will give you pretty good trade opportunity, a good swing trade to the upside. Or if you're taking the long route, right? The long route, you could take it for a quick momentum trade, but that momentum trade, it will think of it being about a day or two, right? So that momentum trade steps us to the 1 hour, right? When you look at the 1 hour, this is what we are seeing, right? The 1 hour on NVIDIA. Remember how I said the 50 being above the 200 is a bullish sign? So we take the opportunity, we take the trade closest to the 50, which is literally right on the 50 right now. And then you set a stop right below the 50, right? So for this setup, right, entry is around 150, 114, 115, right? 150 will guarantee you probably entry. 114, you'll probably have to wait, but you can set a stop at 113. 113 if you want, 112 if you want it to be able to stay in that trade longer, right? 113 will get you more shares. 112 will ensure that you stay there for as long as possible, because 112 is like right here, 113 is like right here, right? So one will have less risk for you. The other one will let that trade breathe a little, because you could see here that structure of that move, it could come back to 112, right? So if here, it could come back to 112. and before it continues to the upside, right? So if you're trading a short time frame, this could be a very good long opportunity for you to catch it to the upside. So you can see how, not just tonight, but basically every night that I come on here, we look at the different time frames, right? The daily, the hourly, and each is showing you a different possible play that you could do, right? That's why it's good to always consult multiple time frames, because different things happen, right? Not just because the daily shows that it's bullish doesn't mean it can't dip, right? And just because the daily is showing is bearish doesn't mean it can't go up throughout the day or throughout the days, right? All right, so that's AMD. Let's look at NVIDIA. NVIDIA's been running pretty crazily too, right? So let's look at the daily first. Ooh, 4 hour. Usually I don't use the 4 hour. 2 candles for a day, too much. All right, so NVIDIA. So we're seeing some resistance now, right? Oh, let me, come on, man. Okay, so it's been a pretty crazy 4 or 5 days. It's being met with some resistance. Now, keep a look at this area, right? This was an area of all resistance, right? So you see here where price got rejected here, where it couldn't break, and then it got rejected to the downside, right? This line right here is where price got rejected from before, and it's not coincidence that it just comes to here and slow down, right? You can see it had 1, 2, 3, 4 days of basically straight up movement, right? And then it just hits a wall, because this wall was from back here, right? People are probably getting out, taking profits. You have people that from back here, right? From this drop right here, that maybe they're thinking about getting rid of their position or taking a loss in the position or whatever. People who got in down here, people who got in right here, right? Multiple people. So when it randomly hits a wall like this, be on the lookout, right? Because what we want it to do, if it's going to continue its bullish move to the upside, we want it to establish some sort of support, right? We want it to hold this, at least to hold this level, right? It did hit a wall here, but I wanted to hold this level, right? This level right here, and this is 250. I wanted to hold there for it to still be bullish. But if it breaks down here, that'll be neutral. It's not going to the upside, not going to the downside. But if it goes to this range, back into this range, it'll continue this downward move, right? It's AMD, not AMD, NVIDIA, right? So be on the lookout for that. So it could be a good time for shorting, because you could use this as your where your entry, right, close to this right here. So around 270. With a stop just right above here. So you could say 275, right? 275 is where you're setting stop at. So that's $5 risk. And if it goes down to here, right, to 250 again, $5 risk becomes a $20 reward, right? So $20, so that's 4x right here. But if it goes back to down here, this is about right down here. It's looking at the 115. So 115 to 170, right? That's about 65, right? So $65. That's if it drops. And then if it goes even lower, right? So you have like a trade that's like 2-3 weeks long. It goes even lower and it gets down to here, right? Back to the 180s, 175 range, right? So you basically get something that's like $100, right? So for $5, right? So you can see here's 4x. Here, right here, I think it's closer to like 8 8 or something, right? And then down here is 20, right? 20x, right? But you have to be more patient with that for that 20x, right? So let's take a look at the hourly. So on the hourly, if you're following the 50 and the 200, this could be a good time to maybe get in. Right? Your risk to reward. So you want to put your stop down here, entry here, but you got that drop here, right? So your risk is right here. This is your risk. So right here is about 263. Stop will be about 260. So $3 risk, right? For potential to the upside. But since we see this sort of slow down right here, it could be caution to not take that, right? Even though the structure is showing us that, right? Like this right here. This could be one thing that happens, or if it just dies back down, right? So, but you never know until you take that trade. So it could be a good long too, a short little long, right? Because this right here was 1 day trade, right? Basically 1 day. So if you think that it's going to continue like that, right? Or maybe this is going to be a repeat. You could get in tomorrow and it shoots up tomorrow. That's one good trade for you, right? One good day trade based on the hourly, right? But if it dies, right? If it dies off tomorrow, right? If you want to take a short tomorrow, you could see what it does when it retests 270, right? 270 could be where you're going to be entering for a short. If momentum comes back to 270 and just fizzles off like this again, 270, and then you can set a stop right up here, right? 272, 273, all the way up to 275, right? Play for the rejection to the downside, right? So multiple ways to do it. For if you want to short, you want to wait, right? At least till like about midday. You can see here, right? Today it opened, it shot up, and then about midday it shot down, right? Same thing happened here. Open, it shot up. About midday, it shot down, right? So repeat 2 days, right? If it's 3 days in a row, it means there's weakness and it dies, right? So keep a lookout for that. Could be a potential good short. All right, so last one for the night. Let's take a look at Lockheed. Lockheed's been doing pretty good too. It's been doing the opposite of everything, right? Oh man, I think we snoozed on it and we lost. So that was a good entry right here. Would have been a good entry for a good swing, right? This candle here, because you can see that. Look at that. Oh, we missed it. I mean, it's still decent to get in, but maybe closer to down here, right? At 420. If you can get at 420, you could set a stop somewhere right down here at 410, 410, 415. Okay, let's take a look at it. Okay, so right here is 405. 405, 410 will be like literally right at the 50. So about 405, right? So you set a stop at 405. So right here, 405. So you have a $15 risk for the long side, right? $15 risk. If you were to enter close to 420, right? Enter 420, stop at 405, and catch it to the upside to 480, right? Your target is 480. So that gives you right here 60, right? $60 reward for $15 risk. All right. So let's see. at $30, that will basically be 2x, right? So right here, this is 4x. So $60 at 480, you'll be looking at 4x, where x is 15, right? So Lockheed, it's not bad. It's looking like it's rejection. There's some sort of price. Right here that could be huddling in this space for a bit. It could be bouncing here, back and forth in here. So you haven't missed it completely, right? You haven't missed it completely. So it looks like price is staying in here for a little bit. So if it comes back to 420 again, you could catch it to the upside, right? Something to keep an eye on. Maybe send an alert. Dive down to the hourly. So you can see it's wishy-washy now, right? So not really good to long. You could take a possible short, right? Possible short, because you see how the 50, 200 there just kind of going above and below one another, right? Right here, you could say that this is resistance. So you could take a stop somewhere here, 450 as a stop, and try to enter at 445. So a $5 risk here, and catch it to the downside to 420 again. Right? So this right here is about $25, right? $25 trade for $5 risk, right? It's your risk right here. So that's 4x, right? So that's a 4x trade. So that's what you're looking for. All right. So there's some plays, possible plays, like we're looking at the big blue chips, which you don't really have to worry too much. There's a lot of liquidity there. That's why I look at them. But yeah, this is it. So I hope you guys been learning something. I would like it if you guys share, but I can't ask for the world. So I'll continue sharing what I been looking at and what I do. This is how I keep consistent, hosting these sessions. So I look at what's happening in the stock market too, because I am not a day trader. I'm not a day trader. I'm still doing my regular 9 to 5, and still working and just placing trades and having it automatically do its thing. So hoping you guys learn it as well. And also hope this opens your eyes that, hey, you can still do your 9 to 5, still trade for some side income, right? And be successful at it, right? Be a successful trader and a successful worker and whatnot, and just have double the money coming in. So hopefully that opens your guys' eyes to it. But with that, I'm going to close it out. Enough of me rambling on. Just a reminder to everybody, I host these sessions every Tuesday and Thursday at 10 p.m. Eastern. So feel free to join me, and also share this with people who are who are interested in learning about the stock market, but they don't know where to begin. For sure, I'm trying to make this as user friendly to everybody to become a trader or to become interested in stocks. That's my goal. So with that, I'm signing out. Thank you, everybody. Stay safe and trade profitably. Bye-bye.